how are you feeling going into this Fed meeting and given all the recent price action with Bitcoin?
Feeling good. Yeah. I mean, 50% from the highs, a little less than that, I guess. But when we were at 33,000, a little more than 50%. I mean, for me, like I love it. The volatility, like I kind of said at the end of the thread, is my opportunity. People that are buying Bitcoin, it's your opportunity. If Bitcoin wasn't volatile, then the returns wouldn't be so good. And so, yeah, I mean, at 20 years old, I'm loving it, continuing to allocate and just at a steady pace. So nothing but a thing for me.
Nothing but a J thing, baby. All right, well, let's talk about Bitcoin correlation to Nasdaq. We've got the chart here. These things are married to each other right now. They just seem to be moving up and down. Wherever one goes, the other one goes. How do you think about these assets, the correlation, and then who's leading who?
Yeah, so put this thread out on Sunday. So chart's a little bit outdated, but yeah, I mean they've been trading tick for tick with each other, especially during the U.S. Cash session. So it's for now, right? Everything is about the Fed, and really markets are front running the Fed, right? They're giving the Fed a gut check and saying, oh, you're going to raise rates. All right, well, the VIX will blow out to 38, and markets are going to tank. And you actually saw, the funny thing was you saw like the prediction market for the Fed's fund rate as everything was tanking, it started to cut back on some of those rate hikes that had priced in. So that expected Fed's fund rate at the end of the year, as markets were tanking, it actually was tanking with it. So it was almost like the Fed put was being priced in as markets were tanking. And so I think the correlation stays steady for the time being, right? Everything is just kind of a reflection of this everything bubble liquidity, and Bitcoin is like the most pure form of that. It's just a check on central bank irresponsibility. And so if central banks get marginally more responsible with their monetary policy, the Fed mainly, then Bitcoin is going to get hit as a result. And that's fine because, there's multiple types of allocators of this asset class. There's the Bitcoiners, right, that just stack, hodl, got that hodl mindset and embrace the volatility. And then there's, the macro fund managers that are running correlations and flipping Nasdaq and Bitcoin and ARK and all of these things as kind of a risk on type of asset. And so, there's multiple different allocators, but I think 2020 and 2021, we saw a lot more of these kind of macro correlation type funds come in. And that's who's been the marginal seller as of late.
And so when you start to think about kind of the Fed, the interest rate decision, there's a couple of other things that we can look at, right? So the first one, let's say on the Fed rate hikes, the Euro-dollar futures continues to price in 4 rate hikes. When we look at this, how much weight, I guess, do you put onto things like Euro-dollar futures?
Yeah, so I mean, essentially, I just like to look at it as a gauge for what the market expects. And so since about November, you've seen that really spike up when the Fed first came out and said, yeah, okay, guys, you were right. Inflation's not transitory. This is our mandate to keep it contained. We might have to do something. That's when you kind of saw Bitcoin first really react to it from the highs and started to sell off. And then the Nasdaq followed. And so, I don't put too much weight into Euro-dollar futures. Like if the Fed raised rates to 1% and the financial system is so fragile that it can't handle it, well, that's just I think that's just saying how much we need Bitcoin, right? Because ultimately, if there's a deflationary collapse because the Fed raises rates to 1% and real yields are still very deeply negative, there's a bigger problem on our hands. But on the shorter time frame, like we saw in say 2020. Bitcoin is risk off, and if the dollar is pumping, then Bitcoin will see that kind of liquidity hit.
Got it. And so when you start to look at the actual reasons why Bitcoin's price had exploded, you rightly call out the Grayscale Bitcoin Trust and the arbitrage that was happening there. Describe to people what that actual arbitrage was and why so many Wall Street funds were going and allocating capital to Grayscale in, kind of Q3, Q4 of 2020 and into the beginning of 2021.
Yeah, so Grayscale was a huge driver earlier in the bull run. I mean, obviously, there was a lot of people and investors that were allocating to Bitcoin, the spot asset itself, and taking custody throughout the last decade. But in 2020, after the COVID kind of meltdown and then all of that stimulus that followed. But Grayscale is an interesting story. They've been around since 2016, I think a little before that actually. And they were for the longest time like the only kind of OTC product, over-the-counter product that traditional accredited investors could gain access to. So if you were an institution or an accredited investor, you could bring $100 to Grayscale and they would give you $100 worth of GBTC, or you could bring Bitcoin to them and they would give you $100 worth of GBTC. But those GBTC shares, they don't trade like an ETF. They trade on these OTC markets and they have a 6-month lockup. And so oftentimes, because this was the only game in town for gaining Bitcoin exposure in, say, a retirement account or on Wall Street, these shares traded at a pretty big premium, right? So that there was, say, $100 of Bitcoin in this share of a trust, but on the OTC markets, it would trade for, say, 120. So there was an interesting arbitrage opportunity that arose where if you were a fund, if you were an accredited investor, you could bring $100 to Grayscale and then receive $120 of GBTC trust because it was trading at a 20% premium, but there was a 6-month lockup. So essentially, like, everyone on Wall Street increasingly was like, oh my God, this is just a money printer. We can just get this 20% arb. It often blew out to even like high 30s. And it was just basically a way for Wall Street firms, especially at the end of 2020, to just mark up their books with a profit. And so this throughout 2020 and early 2021, Grayscale added about 400,000 Bitcoin. And often days I remember they bought 10,000, 12,000 Bitcoin at a time on certain days. They announced it. So there was just huge inflows. Yeah, here's that premium and discount, and at the bottom there is the daily inflows into this product. And so as more and more funds did this, and oftentimes some would hedge, so some would short Bitcoin or a Bitcoin-like product, say like MicroStrategy, that's very correlated, and then buy these GBTC shares, and they would, that premium, whatever that GBTC premium was to net asset value, that was their ARB. That was their essentially their profit. But the trade unwound because of the 6-month lockup and so many funds doing it. Shares actually on the OTC market started to trade to a discount. And so that's when things got kind of hairy for a lot of these funds. Was the ARB that they thought they had, that's quote unquote risk-free ARB, wasn't risk-free. And so a lot of those funds implementing that trade kind of unwound on them. And so there's 650,000 Bitcoin now, or a little bit less than that, that are trading basically as a derivative in terms of GBTC shares that are trading to a discount to net asset value on secondary markets. And so throughout the last couple of months, you've seen as the Nasdaq is sold off, as Bitcoin is sold off, as kind of there's been a risk off sentiment in markets, GBTC discount has reached record lows. It actually hit 30% discount to net asset value. So what that's saying is that basically all these macro funds that allocated to this in 2020 and 2021 are just basically relentlessly market dumped these products onto the secondary market. And so that actually had an effect on the Bitcoin market, because if you're a fund and you want to allocate to Bitcoin, do you buy Bitcoin or do you buy GBTC at a 30% discount to net asset value? So on the margin, it's actually siphoned away, for the time being, siphoned away some spot demand. So an interesting kind of opportunity, as it went both ways. It almost like artificially boosted the price of Bitcoin early in the bull market, and now it's siphoning a little bit of demand, but interesting arbitrage opportunities on both sides.
So when you look at the GBTC, for those to make sure they really hammer this home, is you had all these Wall Street folks who were going and they were arbing it. They were investing in the private market. They were then flipping it for an additional profit in the public market. It was like the greatest secret Bitcoin trade on Wall Street history, right? And then all of a sudden, when the market started to cool off, people started to get worried. You got a premium that switched to a discount. Then they all started to sell because now they're going risk off. And so there's still a bunch of Wall Street folks or kind of large institutional investors. They want exposure to Bitcoin. They don't need to go buy spot Bitcoin because they can just simply go buy GBTC. And if they've got the appetite to hold it until you get a closing back to NAV, it actually is not only giving you Bitcoin exposure, it's giving you Bitcoin exposure plus the discount that you're getting, which now has reached levels of 30-35% on some days. So it's pretty attractive in terms of if you're a long-term holder on Wall Street, just go buy this public market fund, and it takes away that spot demand, which obviously has an impact on the price because there's not people buying spot Bitcoin. They're simply buying this kind of synthetic or indirect exposure. Is that a fair way to kind of summarize it?
Yep, you nailed it. I mean, depending on when that spot ETF is approved, and I think Grayscale, the consensus is that they're one of the leaders for when to get approved. I mean, 650,000 Bitcoin, that's quite a substantial amount. And so they'd definitely be one of the most liquid products in the world. I think in terms of ETFs, if they were an ETF, they'd be in terms of assets under management, top 50 in the world. And so, they're definitely a market leader in the spot ETF race. It's up to Gensler for when it comes, but if GBTC is trading to a 30% discount to net asset value, and say, base case, it takes 3 years for a spot ETF to be approved, which I think it'll be a lot sooner than that, then you're basically, I guess, if you factor in the 2% annual fee, but more or less like you're outperforming Bitcoin by 10% annually if it takes 3 years. And these are, back of the napkin type math here, but it's basically just a way, almost a guaranteed way, if a spot ETF conversion happens, to outperform Bitcoin. And so obviously there's not the self-custody kind of characteristics like Bitcoin, the native asset, gives you. But in terms of, secondary exposure, retirement accounts, or, for fund managers, it's definitely a pretty good opportunity.